Houston's real estate market has been absolutely insane throughout 2021, and with the third quarter just ending, we're going into the fourth quarter. Here is Houston's market update as of October 5th, and we're going to talk about inventory. We're going to talk about what the Feds had just said in regard to rates, as this has a huge impact on the real estate market, making it easier for people to take out loans and have great low interest rates to hedge against inflation. And as Houston's real estate has continued to skyrocket. So without further ado, let's get started. But before we talk about the numbers, my name is Isaac Rose. I run a real estate business here in the Houston area, serving all of your real estate needs, whether that's buying, selling, or renting. So if you are looking to move or to sell in Houston or some of its fine surrounding areas, please reach out to me. My number is below. It's the only way I can help you. And now let's get started. So Houston has had a killer year here in 2021 with 17% increase of appreciation versus the year before. 17% is an insane amount, where Cypress and Houston in general has had about 5% year over year average. So we have tripled that in the last year. Houston has sold over 70,000 homes in the past 12 months. This is a 17% increase from what we have seen in the previous 12 months. And what has caused this is low interest rates and people staying at home due to the pandemic, which is causing people to upsize or downsize. And while money is cheap to borrow, it just makes sense to either refinance your home or to get out of it and sell at a profit. Houston's real estate has had an insane amount of appreciation due to the fact that we haven't had so many people wanting to sell versus the amount of people that want to buy. Our supply and demand right now is still pretty crazy. Houston has still about 2.1 months worth of inventory. It has cooled down a little bit with people going back to school and whatnot, as it's kind of a headache to manage selling your home and having your children go back to the public school system. So we can see that inventory has risen to where a couple months ago we were probably sitting at about a month and a half. So with the inventory rising, it has been a little easier for buyers, although a normal market, or an average market as what they call it, is about 6-ish months worth of inventory. So we can see we are still nowhere close to that. So it is definitely still in the hands of the seller, that if you price your home right, you should and will get your home for your asking price. So as of August, we have had forgive me as I read off the chart just to keep all my numbers straight, but as of August, we have sold 9,800 single-family homes. Out of those 9,800, 8,500 have been resale properties, and 1,300 of them have been new construction homes. We have had in the Houston area 800 townhouse/condos sold, and we have had over 3,000 rental properties go under contract and tenants move into them. The average price for a square foot here in Houston is $155. New construction is about $166 on average, and resale is averaging about $153 in the Houston area. So we can see with a lot of these numbers that housing has been selling like crazy. The past 2 months has been record highs of real estate sales. I'll have numbers right here, and you can see that we have just been blowing it out of the park in Houston while interest rates are still low. And that brings us to our next topic that we're going to discuss right after we talk about months of inventory and some popular places here in Houston, is that with the Feds, they have a huge impact on the real estate market, whether they continue to print money by buying bonds, which is going to keep the interest rates low. And I have a couple things that Jerome Powell, who is the chairman of the Federal Reserve, what he had said about the rates and how they are going to taper that. But before we talk about that, let's mention a few popular places in Houston that I love to work in for inventory. And we're going to start off with Katy. Again, I'm going to read my numbers to keep my facts straight. So as of Katy, as of this month, actually, this is all currently live data as of October. So Katy, we have just barely 1 month of inventory, or 0.9. We have had over 8,000 homes sold in the past year, and the average price of those homes have been $354,000. Conroe has had 1.8 months worth of inventory currently, sitting at about 4,000 homes sold in the last 12 months with an average sold price of $317,000. Spring has 0.8 months worth of inventory with 6,400 homes sold with an average price of $342,000 in the past 12 months. Cypress, we have just under a month, 0.9 months worth of inventory with 41 homes sold in the past 12 months with an average sold price of $381,000. And the Woodlands having just 0.6 months worth of inventory with 2,200 homes sold with an average sold price of $648,000. So there is a couple places that are pretty popular in the Houston and the surrounding areas. And again, as I said earlier, Houston also sits at about 2.1 months worth of inventory. But most of the places I tend to work in, with it being the Woodlands and Conroe, I service all of the Houston area, but I find that a lot of people are flocking to those areas, and for good reason. And that is why we see the price is definitely much higher than the Houston average, and why the median price continues to rise, and why the months of inventory is really low in those specific areas that I had just mentioned. So here's a few of the remarks and comments that Jerome Powell, who is the head of the Federal Reserve, had to say about tapering. And this is what really affects the real estate market and definitely the economy, because we can see with stocks and futures, we've had a couple times where the Feds had mentioned that they were going to start tapering sooner than when they had originally predicted, and then this caused a massive sell-off of stocks, and futures were down, and it was kind of scary for the stock market until they said, okay, no, we're not going to raise rates just yet. We're going to taper a bit differently. And so with that, we need to keep our eyes out for what they have to say about interest rates. So here's a few things that Jerome Powell said that they are going to do in regards to tapering. Number one, the test for raising rates is going to be substantially higher. And note when he said substantially. Two, they are going to slowly raise rates on the second half of 2022. They are going to raise rates twice in 2023, and they are going to raise rates 3 times in 2024. As of right now, that could possibly change. They've kind of mentioned changes to their tapering before, and again, it caused like almost a panic sell of stocks and whatnot, fearing that cheap money coming into the economy was going to stop, and people were just going to start hoarding all their cash. With all that being said, I hope you found value with this video. Please like and subscribe. It's absolutely free, and hit the bell notification if you want to see more of content when I upload it. I do these market reports every single month, aside from other real estate related content here on this channel. And if you or someone you know is looking to buy or sell real estate, please contact me and I will assist you with all of your real estate needs. And again, share this video if you have someone you know that would benefit from this video. Again, thank you so much for watching. I appreciate all of your time being spent watching this. Again, it takes a lot of work to put these together, and I try to spend as much work and diligently find data as I can. So thank you so much for watching, and I hope y'all have a wonderful rest of your day.